Hey, Jay the Accountant here with another video. I was browsing Twitter this evening, and this came up on my feed by a tax lawyer. And he's basically saying that if you view NFTs like buying sports cards, memorabilia, or anything else of that nature, that you should probably tune up your knowledge on the hobby loss rules and case law. And he's not wrong with this. So, what a lot of us are seeing in this industry are people trying to rig the loss rules for cryptocurrency or NFTs. And so, what that could entail is somebody buying an NFT at an insane valuation and then selling it most likely to a related party and claiming a loss on that, but still keeping the money within the two related parties. So basically they're gaming the tax system that way. Obviously that's illegal. But on the flip side of things, some of you are just buying NFTs because you like them or you're treating them as memorabilia. You really need to meet specific rules to determine whether or not you can take the losses on that. Hobby loss rules for businesses, they basically say if you have losses for 3 out of 5 years, you're determined to have a hobby and you can't take those losses anymore. On the specifics to NFTs, they'd actually probably look at your habit and whether you're buying or selling NFTs short term, whether you're actually looking at the market. Like for example, here in this tweet with my reply back, I've seen a lot of people actually diligence on artists and projects, and they're buying NFTs at a lower valuation, and they've been able to hold them for a long period of time and then sell them at a high point. But some of them are actually keeping them to the extent where they are trying to project the Ethereum price swings in USD, and so they're selling if they think that swing is going to be in their favor, and ultimately buying back in another period of time. So in order to have investor status, you actually need to actively be spending money on the market research. So if you're subscribing to places that are giving you insight into artists, giving you insight into the markets, that's one test that the tax courts would look at, and the IRS. They'd also look at a few other things as to how often you're doing it, whether or not it's something you're kind of consistently doing, not something that's just one-off and you're holding it for short term and you're kind of just buying and selling them as you please. That you would be limited to the hobby loss rules for that. And so basically, let's just say you bought an NFT and you spent $10,000 on it. Well, if you spent $10,000 on an NFT, and let's just say for some reason the marketability of the NFT now has dropped to $1,000, and you do this consecutively throughout the year, you don't really have a plan, you don't have any insight into the investments, you would not be able to take that loss due to the hobby loss rules. So this is an interesting area that I think we're going to see the IRS pick up enforcement more on quite a bit, especially when they start sending notices out to people. If they start seeing that you're having a lot of capital losses in the NFT area and it's consistent, and you've been doing it for a while, you're probably going to get flagged, and they're probably going to follow up with you for some proof as to what you're actually trading. I find this very interesting because majority of you probably already know this, but an NFT is essentially code stored on the blockchain with an URL of an image hosted by IFPS. And it's not the image itself in most cases. Early on, there were a whole bunch of NFTs that they stored the image on the blockchain, but the file size to store all those images was just way too much for the blockchain to handle. There was just too much data to be able to do that. And so in that case, they ended up just using a URL in the blockchain code of the asset. And so that URL cannot be changed, but ironically, the image at the URL location can. And so this has caused people to buy some NFTs, and they've actually had the image changed at the end of the at the IFPS servers. And a lot of people who bought the NFTs have been surprised that their image has changed. Has the technicalities on that occurring and how often that's happening, I don't think it happens very often, but it's just something to be aware of. And part of the reason why I made this video and why I posted this on Twitter is to get some insight into the tax professionals as to how they're viewing these, because the IRS is going to view an NFT as an actual collectible. It's kind of setting an odd precedent for digital assets and digital property as a whole, because they're essentially going to view a map of a collectible as a collectible and not really the image itself. But with technology changing, who's to say that that image, that link is not a collectible? Because we do have the ability for IPFS to store that image. It's not like it's a regular occurring case that they're going down, and I'm imagining that as technology continues, the redundancy of the data and the images will be greatly improved. So that's just a little bit of the intricacies of the tax law surrounding NFTs and losses. If you guys have any questions, you know where to contact me. I've got an engagement link below. You can set up a meeting with me. I highly advise you seek a tax professional for these issues because they're very complicated, and in the case that you get a notice or you need a tax professional to respond, they'll already have your file and they will have filed your tax return, and so they'll be able to shoot a letter quickly to the IRS with their guidance they use to make the determination that you could take those losses. And that requires us gathering documentation on how you're approaching NFT investing and what you're doing, and we can build a case that supports that for you. So thanks for watching. This is just a quick tax tip, and I hope you guys have a great day.